Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, as widely expected, the RBA kept the official interest rate on hold for August. The RBA's last move was a cut to the current historic low of 1.5% for the 24th consecutive month. At present, though, the Australian dollar has lifted its bullish game and presents itself now towards a region of 74.55.65, with the 60-day moving average been around that level of 74.60 also. It is assessed that the market should fail towards this region. The reason behind that is, from a technical point, it's not overly bullish, but also, as you can see, the market has really struggled at this level and it's so expected to again. Therefore, I'm feeling that the market should get ample opportunity to short the market and look towards the downside with immediate support now seen at 73.80, but the objective still at 72.55.65 on the broader outlook. Later today, though, we do have the RBA Lowy speaking in the afternoon, and he could give us a few clues in what the RBA is thinking. But nevertheless, with the outlook still remaining negative, I still feel comfortable to shorten, as I mentioned, towards the region outlined at 74.55.65 with the 60-day moving average at 74.60. It would seem that the bulls stepped up the game slightly overnight in front of the level of 114.85. With the dollar index still idling at 95 figure after posting a high of 95.18 with the 2018 high of 95.41, the dollar index has still got a lot of work to do to post a bullish, sustainable rally. Therefore, we could see now that the bulls may be reloading long positions in front of this level of 114.85. Reason behind that is they will place their stops under there, clearly seen as a significant level, because below the 114.85 brings in a target of 112.85. At present, though, from a technical point, it's not bullish. Therefore, I do expect to see resistance from around 116.15 to 75 to cap the market, with the strong ceiling above at 117.40.60. Minor support seen on the day at 115.50, with the objective still holding at 114.85. The dollar yen case is still sustaining above the level of 110.75, and I do expect to see further momentum coming back into play and look towards the region of 112.50. Place your stops clearly to your risk management beneath the 110.75, because if we see a break there, could start seeing a bearish case evolving towards 110.15. But this looks unlikely while this pattern holds to a relatively strong case to the upside. The pound's still relatively weak, even though it has attempted to stage a recovery but failed overnight. What is viewed, though, is that the concerns for Brexit still remain, and with a so-called hard landing would leave the UK without a predefined agreement with the relationship between Brussels and London. After Britain officially leaves the EU in March 2019, it was mentioned overnight that the UK Secretary of State for International Trade, Liam Fox, said that there is a high chance of a no deal. Now, that being said, the Bank of England Governor Mark Carney has also warned about the effects of a no Brexit deal, referring to chances that happening as uncomfortably high, which may leave Great Britain on a situation of a cold comfort. Therefore, I do expect to see weakness to continue to the pound, especially with the stochastic looking the way it is. But we are a little bit oversold, so a little bit of profit taking may start to emerge around the 128.40.60 level. Resistance on the day seen around 129.75 to 130.45. The gold outlook relatively unchanged. Although it did slip away from the highs, the market is still relatively bearish but oversold. I do expect to see further risks of a recovery soon, but to get this market out of the oversold region. The base currently holds around 1,180, and I do expect to see longs slowly accumulating towards this region. The ADX is overheating, but the stochastic still supports probably one more test down. Immediate support on the day comes in at 1,206, and then 1,198. Wrapping up with oil, the market took another stab towards the upside overnight to 69.5, but didn't sustain. It is viewed from a technical point though that the MACD is posing a little bit of a threat here. And like before, if we do see a break above the zero axis, if you are short, place it above 69.5, your stop loss in accordance to your risk management. But at present, I still feel the market will fail towards this region after a few attempts, at least 4 times, has failed, and I do expect to see $66 a barrel be retested. Well, that wraps up for today. Thank you very much for joining me, but as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.